Hello traders, welcome to your daily market update for Wednesday the 6th of May 2015, and we've seen a fair bit of price action and volatility on the markets overnight. It was quite interesting to see how it was all playing out. Quite a few analysts were actually bewildered and baffled by the results from the RBA, and then following on later in the session really unsure as to the deep-seated reason behind the US dollar falling quite significantly last night, and we'll look at that now. As you can see, I'm on the Forex Nation website. I just want to let everybody know that if you do come up and click on Tools up here, we will be going to the economic calendar for you, so you can go there each day and grab the economic calendar, and we can move on from there. So what happened was this morning we've seen the New Zealand data came out, and the New Zealand data was very surprisingly weak for their employment. Their unemployment level rose by a significant amount, and we've seen very heavy sell orders placed on the New Zealand dollar as a result of that. And I think that that will weigh on the New Zealand dollar moving forward. And then later on in the session, we did have retail sales out of Australia, and that come in a little bit under expectations. Coming out tonight and for the rest of the week, we're moving into focus on the US dollar. And as I mentioned, the falls last night confused a lot of analysts, as everyone understands that last night's trade deficit figures came in and it was a big blowout. And it will weigh heavily on the Q1 growth results. And that is understood by the market. However, we did see an uptick in non-manufacturing ISM report, and that typically would have offset the negative sentiment in the market. And also we need to remember that the Fed did mention that negative Q1 results for growth were transitory, but all of this wasn't enough to reassure the market, and we did see a big sell-off in the US dollar. So a lot of analysts were coming out with their opinions, and it was quite mixed in terms of where they see the forecast. Some see that the delaying of rate hike will continue, and the US dollar will fall. And then other analysts had the opinion that the market will now look past the Q1 and start looking towards data and forecasts into the future and really brush off what we've seen in recent trading sessions. So we'll have to wait and see really as to what's going to happen. We had bond yields and the US dollar versus the Japanese yen not really reflect what we've seen in the US dollar across the other pairs. So it still seems that a 2015 rate hike still remains intact for now, but the rest of the week is riddled with US data, and that's what we've got coming up tonight. We've got ADP employment change. That's our first look at what we can expect for the non-farm payrolls this week, and then we have non-farm payroll productivity. These two figures are going to be quite important for the market, and we'll be looking at those quite heavily. We also have market services PMI for the UK, and it will be interesting to see what the results come out there and where we are headed. I should also note that we are heading into the UK election. As you can see here tomorrow, the UK election for 24-hour period, and even though the US dollar traded quite higher against the other pairs, on the back of weaker construction activity, the move was pretty much on the back of the US dollar having a fall. So we need to keep an eye and have a chat about the election and the risks. So the election in 2010 took place, and it was very similar to what we're looking at now. It was somewhat at a loggerheads. There was no clear winner and no general consensus as to how the parties will be made up. So looking back at that, it's extremely interesting to see that the pattern is not repeating itself right now, even though that we do have a similar hung parliament. So that is interesting. But however, there are some talks that the parties will reach a deal quickly. But I'm not overly optimistic as to that will occur, and maybe that's creating that chatter is creating a different pattern to what we've seen in 2010, but that remains to be seen. But moving forward, we need to keep an eye out, because what happened in 2010 is the market was sold off very steeply on election day. The Great British Pound versus the US fell 400 pips, followed by another 500 pips slide the following 2 weeks. So we just need to keep that in mind. We could see the same scenario play out. It isn't too late for that scenario to play out. And if it is to play out, it would be from today's European session through for the next 36 to 48 hours. We would want to see signs of that sell-off if we were going to say that scenario is possible. So I'll be keeping an eye out for that, as it is a real risk, and it is something that the market has been indicating and talking about in the lead up to this. And I think now's a prevalent time to be discussing what can exactly happen, and we'll look at the charts. Before tomorrow's video, we will see that we do have Australian employment figures coming out, and we are expected to see an improvement, but we will wait and see exactly how things, actually the unemployment rate is supposed to get worse, and we'll wait and see whether it actually is as bad as what the New Zealand's unemployment rate was. And if that is the case, I think the US dollar might be capped and be kept under 80 cents for now. So we'll keep an eye on that. Let's have a look at the dollar index. If I go to a daily chart here, you can see that we did have a bit of a bounce, and we have sold off, and the momentum for now looks like it is to the downside. We will wait and see exactly how it plays out, but resistance levels seem to have played its part, and for now we could be looking to move down to 94 cents. We'll have to wait and see how the market interprets the data coming up for the next few sessions, and we'll see if momentum can actually have a shift or not. But until then, I think the pressure is to the downside. So we will keep that in mind, and let's have a look at the charts and see what we can come up with. The New Zealand dollar, as you can see here, I've had on the daily chart a rising wedge pattern, and we were trading around here yesterday and we started to grind higher, but this result on the unemployment has really created a big breakout, and we have seen a big price move lower and continue a little bit in today's session. Leading into the European session, it's going to be interesting, but I think that pressure on the New Zealand dollar will continue, and we do have a technical breakout of this wedge pattern sending it lower. If the US dollar does find support, that will only throw fuel on the fire, and we could see this fall further. The Australian dollar is having a fantastic time, and we did have a really big bounce off 77.8 cents, and we are now approaching the 80 cent mark. 80 cents is a big psychological level for the Australian dollar, and although the interpretation of the RBA minutes is that the RBA's moved to a more neutral stance, it's going to be interesting to see whether it actually has enough momentum to push above 80 cents. If it does, we do have some resistance levels slightly higher at 80.3 and then 80.75. So we'll keep an eye on that, but I think 80 cents may be capped for now, especially if we do get a supportive bounce from the US dollar. If not, it should push through and away we go until we get to tomorrow's employment data. And if tomorrow's employment data disappoints, we could see a fall and pull back similar to what we've seen out of the New Zealand dollar. But nonetheless, for now, it is definitely a very positive price action, and that is remaining to continue unless circumstances change. On the Great British Pound, we've seen support here off the 100-day moving average, and we did have a bounce yesterday, and it's quite a nice move, and it's going to be interesting to see how far it follows through. And if we do see the US dollar continue to be weak and continue to slide, I think that the pound could make a run and take a hold towards $1.53. However, it's testing $1.52, and that is a resistance level for now, so we'll wait and see how things pan out throughout the European session. A break here of the 100-day moving average would definitely set up some lower price action. The euro also had a bounce off the 100-day moving average. You can see here by the long wick and the short body, and it does suggest that the move wants to go higher. It has got a head start in the market. It's actually heading higher right now in the Asian session. So we will see how things pan out in the European session, but a break above $1.13 will definitely create a little bit of support and open up the market to expect further moves higher. For now, we have this triple top that acted as support. So major support level will be just under that wick at $1.10.6. So for now, we are trading between this range, and a breakout of either side could actually set the tone for the long-term direction. The Canadian dollar If I go to the daily chart, I apologise, we will see that pressure has come on due to the weaker US dollar and also oil prices finding its feet and continuing to grind higher. A break of $1.19.5 would definitely push it lower, and I think that momentum here would carry through, and oil does look like it's in favour right now. So the pressure is to the downside, and I expect further moves lower. So keep an eye on the US dollar as it is in control for the rest of the week and where the market is headed. The US dollar versus the Japanese yen, as you can tell, we did move up into the upper end of this sideways channel that we have been in for some time, and we have rejected that and faded away due to the weakness in the US dollar. And I think that we will see moves continuing lower and possibly come down and test the lower end of this range if the US dollar weakness continues through for the next few sessions. It is all up to the US dollar for the remaining sessions of the week, and how the data is going to pan out will ultimately control the sentiment of the market and where the future price leads. So keep an eye on the US dollar, keep an eye on bond yields and the economic data coming out. Well, that's it from me today. Have a great trading day, and I'll be back again tomorrow. So until then,